Hey everyone. Okay, so let's go over a little bit from chapter 12 and chapter 13. And the reason we're covering a little bit from these chapters is so that we understand how to calculate the other items that come into play with an ordinary annuity. For example, how much your periodic payments are going to be and how many payments you need to make. Okay, so let's look at an example. For example, what if you're going to get a car loan and you know what the present value of the loan's going to be? Say you're buying a car that's $25,000. Okay, so you know that is the present value. Maybe they've told you that the payments are for 5 years. Okay, but you don't know, and you know the future value is going to be zero, and they've given you the interest rate. So now you need to figure out how much those payments are so that you know that you can afford them either on maybe it's every 2 weeks, maybe it's once a month. And in order for you to look at the car loan with understanding, you could figure out what those amounts are before you actually even go in and talk to the finance department for the purchase of a car loan. Or maybe you want to know how many payments you need to make in order to have so much saved by your retirement, or the amount. Okay, so maybe for an RRSP, your present value is zero, but you know that by the time you're retiring, you'd like to have $1 million saved. You can figure out how many payments you need to make and what those payment amounts are going to be. Okay. So calculating a periodic payment. So again, they give you the formulas, but I would actually like you to use your financial calculator. But feel free, if you would like to use the actual mathematical formula, it's entirely up to you. Okay, so let's have a look. So as you know, we have N is the total number of intervals. The IY is the interest rate. You know your present value. You know PMT is your periodic payment amount, and we know the future value at the end of the term. Okay, so looking at the question that was given to us, Sam wishes to have $500,000 in his retirement account when he retires in 30 years. If he can earn on average 6% compounded monthly, how much should he deposit each month? Okay, so we know that it's an ordinary simple annuity because it's being compounded monthly and the payments are monthly. So how much should he deposit each month to reach his goal? So again, this is monthly. If you wanted to calculate your own, maybe you get paid bi-weekly. So maybe instead of doing monthly payments into an RRSP, you could do it bi-weekly. Okay, so just trying to make it as relevant to you as possible. How understanding this can definitely benefit you through your personal financial life. Okay, so we know that our 6 is our IY, so 6IY. We know that we have to go to the second function, so second IY, which will bring you to the PY level, so that we can put in our 12, enter, that gives you the PY. CY is the same, they're both being compounded, so you don't have to arrow down and change your CY. If you want to have a look, please feel free to use the down arrow and you can see that your CY has also been changed to 12. Second, and then hit the CPT button to get second quit. That'll bring you back up to the main level in your calculator. 360N. So where it is compounded monthly times 30 years. So 12 times 30 is 360. So there'll be 360 payments over the next 30 years to help you save the 500,000. 0 is your present value, so we're not putting anything in today. We'll actually be looking at that once we go on to chapter 13. What if we are putting some in today? Okay, but right now we're not. We're going to look at putting it in at the end of the month. We know that our future value needs to be 500,000. And then, so where your 500,000 is a positive number, and you know that your 360 is a positive number, present value is 0. Remember, where we're going to get 500,000 in the future coming into us, we know that the amounts going out need to be negative, right? So that money going out is going to come up as a negative number. Money coming in is coming in as a positive number. So when we go to hit compute payment, you're going to get a negative amount. There we go. So compute payment, the answer is $497.75 negative. So that's the amount you need to take out of your personal account and invest into savings. Okay, so that's money going out. Okay, this isn't part of the question, but of course, if we decided to round that up to 500, you'd have that much more in your savings account instead of the 500,000 that you are looking for. Okay, so let's continue on. Again, they have a mathematical calculation. Acme Industry borrows $75,000 and agrees to repay the loan with quarterly payments over the next 10 years. The interest rate on the loan is 8% compounded quarterly. Okay, so their payments are quarterly and the compounding is quarterly. Calculate the loan payments. Okay, so we're given the present value of 75. We know that our IY is 8. We know that it's being calculated quarterly, and we know that our N is 40. They're not giving us on the answer screen here how we put it in our calculator. But with all the practice you've had with your calculator, you should be able to put it into your calculator and come up with the exact same answer as what they're giving here. Please let me know if you have any questions about that. Okay, so now moving on to the number of payments. Okay, so we just finished calculating what the payment would be. Now we want to know how many payments need to be made. Okay, so again, they're giving us the formulas, but we are going to use our actual calculator. Okay, so we know what each key stands for. So let's have a look at the question. How long will it take to save $25,000 if you deposit $200 at the end of each month into a savings account, earning 3% compounded monthly? Okay, so again, at the end of each month, so that makes it an ordinary annuity. The fact that it is being deposited at the end of each month and it's being compounded monthly, that also makes it a simple annuity as opposed to a general annuity. So we have 3 for our interest rate. We know that it's each month, so we need second PY, and we're going to hit 12, enter. And again, if you want to arrow down and see that the CY is now the same as the PY, you'll see that that's the case. Second quit to go back up to the main level. 0 present value. We don't have any in there now. We're only going to be making it at the end of each month. We know that the payment is going to be 200. So again, see, it's going in as 200 negative. That's because the payments are going out. Okay, so don't forget to put that as a negative, or you will most likely get an error on your calculator. We know that the future value we want to attain is 25,000. And then we've got compute N, and the answer is coming up 108.91. Okay, so this is what the issue is. You cannot make 108.91 payments. Okay, so we want at least the 25,000. So no matter what that number is, you need to round up if there's a decimal. So instead of 108.91, you'd round that up to 109. Okay. All right. So if you're given the present value, what is N going to be? Oops. Did it again. So again, for this one here, they're not giving us the information for the calculator, but they're giving us all of the variables that we need. So how long will it take to repay a loan of 10,000? So that's our present value. We're borrowing 10,000. If you pay 500 at the end of each month. Okay, so it's at the end of each month. It's being compounded monthly, and we're being charged a 12% interest rate. Okay, so we're going to put that in our calculator. For our present value is 10,000. We know that our IY is 12. We know that if we go into our PY level, our PY and our CY are both 12 because it's monthly. We know the payment is going to be 500 per month at the end of the month. And therefore, you are going to make payments of 22.43. Okay, so again, they rounded up. So even if it's showing less than half, okay, because you're used to, if it's over 5, round up. If it's under 5, round down. However, if we only make 22 payments, then we're never going to clear out the balance of that loan. We have to make 23 payments. It's just that 23rd payment is going to be a little bit less than the 500. Okay. All right. Okay. So I'm going to stop the video here. Please let me know if you have any questions. Thanks, everyone.